Before I move on with the next problem, we will first see what is this dividend that we have. As I said earlier, dividend is divided as pre-acquisition and post-acquisition. So there are two types of dividend here in these problems you will see. Firstly, pre-acquisition means this is the dividend which you receive before you purchase the shares of any company. Okay, so pre-acquisition dividend. Post-acquisition dividend is the dividend that you are getting which is after purchasing the shares of the company. Now you will have better understanding of this part once we are solving the problems. Now let us see this problem here. On 1st April 2022, 5,000 equity shares of rupees 10 each of Amul Limited were held as investments by Mrs. Meera at a cost of 48,000. So this information is given on 1st April. So what is this? This is the opening balance that Mrs. Meera is having of the investments. So 5,000 equity shares, that means 5,000 into 10 is what? 50,000. So 50,000 is our nominal value, and in the cost column 48,000 will be entered. As you can see the solution, I have written in the books of Mrs. Meera, equity shares in Apollo Limited year ended 31st March 2023. Same way the format is prepared, and then first entry is on 1st April 2022, that is to balance brought down 50,000 in nominal value column, dividend column nil, and cost column 48,000. So with this the first entry is passed. Let's move ahead with the second transaction. Second one is on 30th April 2022, she purchased 1,000 such equity shares. So what is happening? Next is purchase is taking place. So purchase means the entry will come on the debit side of investment account at rupees 12. So purchase in debit side investment account. So we'll pass the entry, that is 30th April 2022 to bank 10,000. Why? Because she purchased 1,000 equity shares. 1,000 into face value is 10 of those shares. So it 1,000 into 10, 10,000 is nominal value, and 1,000 into 12 is the cost. 1,000 into 12 is 12,000. That comes in the cost column. So second entry is done. Let us see the third transaction that is taking place on 2nd of June. Company declared bonus shares. Now this Apollo Limited company has declared bonus shares. Bonus shares, what I said, is shares that investor gets for free. Investor did not pay anything. So Mrs. Meera will not pay anything, pay to get bonus shares. She will just get the bonus shares. So amounts will appear only in the nominal value column. So how much bonus shares is she getting? She is getting in the ratio of 1 share for every 2 shares held. Now let's see the working note of this. So what does the working note say is that 1:2 is the ratio. 1 share for every 2 shares held. So I have written bonus shares held. 1 share for every 2 shares I am holding, or Mrs. Meera is holding. Okay, so but right now how much Mrs. Meera is holding shares is 6,000. Firstly, 5,000 is the one she already had in the beginning of the year on 1st April, and 1,000 is what she purchased on 30th April. So that becomes 6,000. So since she is holding 6,000 shares, how much bonus share she should be receiving? Cross multiply, it would be 6,000 into 1 divided by 2, you get 3,000 bonus shares. So Mrs. Meera is getting 3,000 bonus shares. Now what is the face value of the shares of Apollo Limited company? It is rupees 10. So that is why 30,000 into 10, 3,000 into 10 is equal to 30,000 is the nominal value. So that's how in the investment account we will pass the entry On 2nd of June to bank, 30,000 is the nominal value column. We are entering the value, and dividend and cost column nil. Let us see the next transaction. Bonus shares is done. 30th June 2022. Company made right issue in the ratio of 1:2. Now company is making right issue. This is the right shares company is giving. So whenever company is giving right shares, what I said, they are not free of cost. You have to pay to buy these shares. So what company is saying is the right issue in the ratio of 1:2. If you are holding one share, you'll get one right share for every 2 shares on payment of rupees 13 per share. So to get right shares or to buy right shares, you have to pay 13 rupees. Further information is given. Mrs. Meera subscribed 40% of the shares. What it is saying is that Mrs. Meera, as I said earlier, if you remember, that right shares are rightfully given to the investors. Okay, if they are giving right shares to an investor, this investor has a right either to buy these shares or not to buy. Okay, so what Mrs. Meera is saying, she is subscribing or she is buying 40% of the right shares, and remaining 60% balance of a right share she is selling at rupees 2 per share to any other person, any other investor that she wants to sell. So and she is selling it off. Let's see the working note. Right share calculation. 1:2 is the ratio. So right shares, she will get one right share for every 2 shares held. How many shares is Mrs. Meera holding is 9,000. How we get 9,000 is 5,000 opening balance, purchase 1, and 3,000 is bonus shares. So with this we get 9,000 as the shares Mrs. Meera is holding. So for 9,000 shares, how many right shares is she supposed to get? It is 9,000 into 1 divided by 2. That gives us 4,500 right shares Mrs. Meera is getting. Now out of this 4,500 right shares, Mrs. Meera is saying, I am subscribing only to 40% of these shares. So remaining 40%, 60% she would be selling off. Okay, so let's see, 40% only we have to make entry in the investment account. Okay, of this 40% what she is buying, that much only we have to enter in the investment account. So 4,500 into 40%. So 1,800 is the 40% of 4,000's 40% is 1,800 shares. So Mrs. Meera is subscribing to 1,800 shares. Face value is rupees 10. So this becomes a nominal value. And at what price she is taking right shares? It's rupees 13. So 1,800 into 13, we get 23,400. This is the cost of the right shares. Okay, we'll pass this entry first. So if you see here, the right shares entry is to bank. I have written the working note as 2. Nominal value column 18,000, that is 1,800 into 10,000. 18,000 is the nominal value. Cost is 1,800 into 13, we get 23,400 as the cost of those right shares. Now let's move ahead again to the working note. Now as I said earlier, remaining 40% right shares she has subscribed, remaining 60% she is selling off. This only we have to show the calculation, this part. Okay, this thing will not be appearing anywhere in our investment account, but we'll just show the calculations here. So 4,500 60% into 2,700 you get as the right shares which she is selling. At what price is she selling? At rupees 2. That also you can show. So I've shown the calculation here. 2,700 right shares which she is selling into 2. At what 2 price? So it is 5,400 cost she is getting. But this is not, we are not showing any entry in the investment account. Let us see the question again. On 20th September 2022, dividend was received. So now what transaction is that? Dividend received transaction. So dividend, I said dividend, that is pre-acquisition and post-acquisition. We'll see how that is done now. Okay, so dividend at rupees 2 per share is received. Now depending on how many shares Mrs. Meera is having right now, for every share at rupees 2 per share, she is getting dividend. Okay, let's see the working note. See working note number 3, dividend calculation. Okay, now how we are checking what is pre-acquisition and how is post-acquisition. The thing is, pre-acquisition means before you buy your equity shares. So this year what has Mrs. Meera done? She had 5,000 equity shares with her, right? Or as opening balance. So this is pre-acquisition share. Before she would, this year she has made purchase of 1,000 shares. But before this purchase could be made, she had 5,000 equity shares. That means what? These 5,000 shares are of last year, right? Of the year of 1st April 2021 till 31st March 2022 of that year. Okay, so of that year's dividend has been declared. See, they have said dividend is declared for the year ended 31st March 2022. So this is previous year's dividend is declared. So previous year's dividend means on these were the equity shares she was holding for the previous year. So on this dividend she is getting. So that is rightfully her dividend. So on 5,000 we are calculating pre-acquisition dividend. Post-acquisition dividend is a dividend which is, this shares Mrs. Meera has purchased this year on 30th April. And all of a sudden she is getting dividend on these purchased shares. You will think without holding these shares for the entire year she is getting this dividend. So this dividend which she is getting is it is something that is reducing her cost, and we call it the post acquisition dividend. Okay, so now if you can see the working note, pre-acquisition dividend is calculated on 5,000 equity shares that, or the shares which Mrs. Meera is holding as the opening balance. Okay, so 5,000 into 2 at rupees 2 shares are given, so rupees 2 is equal to rupees 10,000 is the pre-acquisition dividend, which will appear in the dividend column, and post-acquisition dividend on 1,000 shares, the shares which she has purchased this year. Okay, if there was any other purchase entry, any other purchase transaction was there, then also on those she would have got. Okay, if any purchase was made after dividend is declared, on that we are not calculating post-acquisition. But before dividend was declared, if there were 3 purchases were made, then we have to take all those, add all those purchases and calculate on that as post acquisition dividend. So on 1,000 shares into 2,000 we get as the post acquisition dividend. We will pass the entry on the credit side of investment account on 20th September 2022 by bank dividend. Working note 3. Nominal value column nil, because the dividend, pre-acquisition dividend 10,000 we are entering in the dividend column, and post-acquisition dividend 2,000 we are entering in the cost column. Okay, so this is done with the dividend transaction. Let us move ahead with the next transaction. On 1st of December, 1,000 shares of Apollo company was sold by Mrs. Meera at rupees 20 per share. So now sale is taking place. So purchase entry appears on debit side and sale entry appears on the credit side. Okay, as you can see here, sales is taking place of 1,000 shares. So I am entering here 1st of December 2022 by bank. 1,000 into 10,000 is the nominal value, dividend column nil, cost is 1,000 into 20,000 is the value. Okay, so that is done with the sale entry. See, whenever sale is made, we have to find out on sale profit is made or loss is made. So we have to do this, show this working note, calculation of profit and loss on sale of investment. Sale we have done at cost of 20,000. So we have sold our investment at 20,000 less average cost. Now let's find how to find the average cost. Okay, average cost is found this way. Calculation of average cost. We are writing the nominal value cost column are prepared. Firstly, we'll add all that is on the debit side. Okay, on opening balance 50 and 48. Purchase is 10,000, 12,000. Bonus shares 30,000. Cost column nil. Right shares 18,000. Cost column 23,400. Then total up 1,08,000 and 83,400 we get. Then whatever is there on the credit side we have to minus. Dividend is there, so minus dividend. In nominal value column, if you see, there is no nominal value amount is there, but in case of cost there is a amount that is 2,000. This is the same 2,000 that is post acquisition dividend which I said, which appears on the cost column in our investment account. So less 2,000, 83,400 minus 2,000, 81,400 we get, and here 1,08,000 remains. Now the next transaction that is happening is sale has taken place. So minus sale. Sale is of 10,000 nominal value. Okay, of 10,000 nominal value investment, what is the cost? So that we need to find out by cross multiply. So I have shown the transaction here, calculation here. 81,400 into 10,000.